Hey, what's up? We've made it this far, and now let's get to our next module topic, investments. Now, what is an investment? The Google definition is the action or process of investing money for profit or material result. In the context of financial literacy, this just means to deposit a sum of your money into a certain account in the hopes that it'll grow in the future. If done right, it's also a great source of passive income, which is money that doesn't require so much effort to maintain. If you have money on you that you'd like to set aside and attempt to grow, you can try a hand at it. You can do this by opening an investment portfolio and within that profile purchasing various investments which you can control. But what types of investments are there and how can you use them to your advantage? Let's explore some of the most common investments people tend to purchase. The glorious stonks memes aside, stocks are actually quite a great way to get into investing and are one of the most common types of investments. They're essentially portions of a company that you can buy. In fact, if you buy enough shares to own a considerable amount of the company, you would even get the right to elect company board leaders. However, it is important to keep in mind the risk factor, as with stocks, their value can rise and fall depending on how well the company does. While you gain profits from stocks increasing in value, the same thing can happen in the negative direction. Next up, bonds are money loaned from investors to corporations, typically the government. They look to raise money through acquiring debt rather than going to the bank themselves. As you purchase each bond, they come with interest rates and lengths that vary by a lot, as some bonds last 6 months while some last 5 years. By buying bonds from companies or the government, you earn money by either reselling them at a higher price or waiting the length of the bond for the reseller to pay you back with interest. Now, mutual funds and exchange-traded funds, also known as ETFs, are both entire portfolios full of assets such as stocks and bonds, which can be traded. However, ETFs are bought and sold like stocks, as their value fluctuates throughout the day, while mutual funds' values are calculated once a day for buyers and sellers. Now, for people looking for investments that aren't so digital but have more physical value, investing in real estate could be great for them. Keep in mind, minors can't really be involved here, but within this field, investors become landlords and buy out available properties and profit by either charging rents from tenants or reselling it at a higher price in the future. However, one big downside is that it takes a big deposit to buy properties, which can be costly. However, if you're looking for a physical investment, this is a great choice. And finally, in recent years, quite a few people have been investing into cryptocurrency, buying quite a big amount of online currencies such as Bitcoin. It can be quite risky. However, some believe that in future years, its value will increase by a lot, and they can resell their stock at a higher price. So then, are you invested in giving investments a shot? If so, I guess that means we did a pretty okay job explaining them. Continue along the module to learn about more investments and how to actually get into investing.